Hey, what's going on YouTube? Welcome back to the channel. Today I wanted to go over my strategy again with a little bit more detail on how I place these trades and what I'm looking at in the charts and whatnot. And I also wanted to go over what my account is looking like right now with this huge market drop for the last couple of days. Pretty much everybody that's invested in the market is hurting unless you really had a huge hedge that it's helping you withstand a little bit of the downturn. But for transparency's sake, here is my account. As people that have been following me know that I've been trading TNA, and it's the only thing I've been trading because at the time that I started selling puts on it, it was pretty low already. So here we are. I have 200 shares at $42 that were assigned to me, and I sold today. I opened a cash cover call on it at the same strike price, so I'm up 53% already because the market's been keep going down, and the rest of my positions are at the 40 strike price. For 40 strike price puts at different expirations, 10, 17, and 24. These two 24 40 puts are a roll because I had a position that was gonna expire at the end of this week at 41, so I rolled it out to 24 days and down to down to the 40 strike. I'm gonna show you that here on my log. So I had a 41 cash secured puts. I had two puts at 41, and I got 64 for it. 64 cents for both of those puts. Well, 64 for each one. And then I closed it for 3.36, and now I have a running loss of 546, but I rolled it down to 40 and out to March 21st, and I wanted so now I rolled them down, and now I have two cash secure puts at 40 strike, and I sold them for 3.57. So if this was ended up out of the money, let's say it ends up out of the money, I would be making $714 minus the fee. But obviously you got to subtract the 546. So overall, if it ends out of the money or I get a sign, I'm still gonna get around 140 or something dollars. So it's gonna end up on green. All right, so I'm not worried about it, and I'm going to go over why I'm not worried about it when I talk about my strategy more in depth, okay? So that's that. Here are my positions, so it's easier to see on, I guess, on the chart. So right now TNA is at 30, it's trading at 37.6, and it's bouncing off this two standard deviation channel right here, and my positions are here. I have a cover call at I have 200 shares of TNA at 42, and I also sold a cover call on it, and then I have the rest of my puts here down at 40. So as you can see, I'm not too far away from where the price is right now. You know, I'm not like up here or even in the middle of it. So that's why I'm not worried about it. And obviously because I'm trading an index, and now that I go over my trading strategy again, I'm going to tell you why I'm not so worried about it, but you probably already know. Anyway, before we start, I'm not a financial advisor. This is not financial advice. This is just my journey, and I hope by doing this, you know, if I get some responses on the comments, I can get some tips, or this also helps you out on your journey to trading. So, you know, don't follow me if you, I will say this, do not do this if you're just getting into options. If you're new to this, you haven't even been doing this for a year, I wouldn't recommend doing this because leverage ETFs have a lot of volatility, and sometimes, like right now, like you're down, like me, you're down, you know, overall you're like $1,500 down. Maybe that's not something that you want to see or you're comfortable with. red days like that, maybe you're not comfortable with, you're just starting out and you're a little skittish, and that's going to create a situation where you maybe sell out of panic. So I would not recommend this if you're not already very seasoned into selling options and the wheel and cover calls and all that. All right, so now let's start. My goal is my goal is to make around 30% a year, which makes it like around 2.5% a month in profits. And I do is I sell options on these underlines right here, which is UPRO, TQQQ, TNA, and sometimes BITO and BITX, depending on the market conditions. And the reasons that I use these specifically is because they're a broad market index leverage ETF, right? So the UPRO follows SPY, TQQ follows the NASDAQ, TNA follows the Russell 2000. So that's why, like I said before, I'm not too worried about it because I'm trading an index and I'm not worried about single stock risk. I'm not worried about a CEO of a company doing something crazy that brings the stock down. And I don't have to worry about keeping up with the news on every single stock that I have that I might have a position in. I don't have to worry about knowing all the details on the financials and any of that because I'm trading in a basket of stocks. I'm trading the IWM or the UPRO, which is the S&P 500. So those indexes get revised every so often, and they take out stocks that are not performing, and they keep rebalancing, and they do that work for me. So I don't have to I don't have to keep up with individual stock risk and their news. Mainly, what I worry about is just broad market conditions and broad market news that might affect the indexes. So, and that makes it a lot easier. Is a lot of less time spent on the screens and looking at different news and whatnot. All right. So again, what are these ETFs? You guys can read this, but in a nutshell, if SPY moves up $1, UPRO will move $3. Same applies on the way down. Okay, and why I use these ETFs? Affordability. So right now, if you look at TNA right now, it's trading at $37. So to cash secure put this to do a cash secure put on TNA would only cost me $3,700. If I wanted to cash secure put IWM, put on IWM, that would cost me $21,000. You know what I mean? You know what I'm getting at? To be able to cash secure this, I would have to use pretty much almost all of my bankroll, which is $26,000. So to me, with TNA, I'm able to have a lot more versatility, and I'm able to have more than one move, right? So if I sell a cash secure put here at 37, I can average down with four other puts. If it keeps going down, I can sell another one at 3,000 at 36. I can sell another one at 34, and so on and so forth. Meanwhile, with IWM, I only have one shot, one move. And so that's what I'm talking about when it comes to affordability. No single stock risk. I already went over that. Trading an index. Liquidity. So pretty much all of these on this list are liquid enough to be able to get in and out of trades quickly. If you look at the chain here on TNA, for the 10-day, you see here the open interest. There's 249, 155 puts open. Look at the bid and ask spreads, right? It's only like 3 cents. You have to look at this. I look at the open interest, and as you can see, if for me, I don't sell more than 5 puts. I don't sell more than 5 puts on TNA, for example. So this is good enough open interest for me. Now, if you have a huge bankroll and you're trying to sell, I don't know, 100, 50, 100, or that many option contracts, then yeah, this might be a little too low for you. But for me, at least, this works. This is good enough liquidity, and all of the expirations have, especially the monthlies, have great, have great liquidity. And we have weeklies, so if I need to roll, I don't need to necessarily roll like 50 days later. There's always weeklies that open up to where if I need to roll, I can roll 10 days or 17 days ahead and roll up, out and down for credit, or maybe like small debit. But there's always versatility when you have weekly options. Okay, guys, always good premiums. So these leverage ETFs, whether whether volatility is up or not, premiums are always decent. You can always you're always able to get at least a 1% per week premium on your ROR, even on low volatility markets. Okay, and like I said, you're trading the whole market with these indexes. If you look on the left here, if you look on the left, this is the list of all all of my leverage ETFs that I look at. There's instances where I will trade some single stock leverage ETFs, but for the most part, I stick to these. That doesn't mean I won't do these other ones, but it's just mainly based on what market conditions and what that stock is doing, right? But to make it easier, I would just stick to these. BITO BDX, it's obviously a Bitcoin leverage ETF. Those are kind of, right now would maybe be a good time to trade them, because BITO and, well, Bitcoin is really beat down today. Like you can see how a huge cap down, right? So now would be a pretty good, I would sell it right below this line, which I will explain what that means later. But it'd be a good time to maybe sell some puts out of the money for BITO and whatnot. But my account right now, I'm kind of topped out on my positions. I wish I had more dry powder to be able to trade some more puts today with this opportunity, but I don't. So, but it's all right, I did open a put, which is this one, for March 14. Yesterday or the day before, when the market dropped really hard, and after that, that's it. I don't have any more cash to play with right now, so I'm pretty full of my account, and I have $4,000, but I just keep that kind of like as a cushion. We don't know what the market's gonna do. It might keep coming down, but like I said, I'm gonna keep it like that for now, and hopefully in a couple of days or so, the market rebounds and I can close some of these positions and find a better opportunity. All right, guys, so now let's kind of go into my now that we went through all of that, let's go over my strategy real quick, which is to sell cash secure puts. It's to run the wheel, right? I sell cash secure puts. I will let some of the puts get assigned and roll the rest if I need to, and then and then cover calls and just repeat the wheel strategy. That's basically this, and I always sell cash secure puts no more than 45 days out. Usually it's 30 days or less, because I like to keep track of my monthly gains, of my monthly percentage gains, and I always try to get 3%, 3% a month. Okay. So now let's go into how I look at things based on the chart and where I look to enter trades. So the two charts that I like to look at, since I sell usually monthly or less than a month expiration dates, is the 1 year and the 1 week, mainly the 1 year. All right. So this is a 1 year chart of TNA, and these are all my indicators. Standard deviation channels. So I have the one standard and two standard deviation channels. Anytime the price is above or below, I trade different things. So if the price is above the one standard deviation channel and above some resistance, I will sell call credit spreads or naked calls. So if price was up here, I would be very comfortable selling some naked calls. All right, because once you get this huge of a rip, profits are going to be taken at some point. All right, so that's another strategy, but When it comes to cash secured puts, I will always try to sell. I will always try to sell calls around this area of the chart. So the time when I sold this cash secured put at 42, the chart, the price was around here at the 44 area. And I was comfortable with that because we're kind of like in a range, and I was playing the bottom of the range. And I'm close to the bottom one standard deviation channel, which which tells you that it's kind of like an oversold territory and a good place to sell cash secured puts. And that's why I started selling puts on TNA, because this is what the area where it was at. Obviously now it fell down, but we're already down at the bottom area. So how much really is it going to come down? Right now it's bouncing on this 2 standard deviation channel. Hopefully tomorrow we can get a nice little bounce up, and then I can kind of move some of my trades and maybe close some for a profit. Okay. So what else do we use? I use the volume profile, which is kind of this gray area. It shows you the volume that was traded during a particular area on the chart. So most of the volume happened like in this area of the $44 price point, and that yellow line tells you what price was most of the volume traded. So little volume here, a ton of volume around this whole area right here was traded. So that kind of tells me where people are big institutions or big players are putting their money. Most of them were trading around this area. So this yellow line also works as either support and resistance, right? Then I also have the 200 EMA, the 200, 50, 21, and 8 exponential moving averages that I use. Sometimes, mainly, I like to just kind of use these standard deviations to find like a good spot for a trade. And as you can see with the standard deviation channels, every time it's hit this one standard deviation channel right here, it's bounced, right? So it's a good way to kind of like, all right, well, if I'm going to sell cash secured puts, it's going to be around this area. If if it's up here, there's no way I'm selling cash secured puts because it's overpriced. The price, it's trading at a premium. It's not trading at a discount. That's how I look at it. Okay. And down here we have implied volatility. So when this this blue line is up, means premiums are juicy and they're going to pay you more for your cash secured puts. And then this one's a pretty standard indicator right here, which is the RSI. If it's obviously up here, I'm going to be selling naked calls or call credit spreads. And when it's down here, to me, it's favorable for cash secured puts. All right, and that would be an explanation for all of my indicators. All right. Now, when it comes to option criteria, let's say I want to trade TNA. Let's say I want to trade a 10-day cash secured put on TNA. What I usually do is I'm gonna look at the return on risk, and I'm always, for every 10 days, I'm trying to get at least 1%, right? Because a month has around 30 days, so I divide the month by 3, so 10. So 1% per 10 days gives me a 3% per month. So what I'll do is I'll come here, and obviously it's not everything I look at, but right now would be, if I wanted to sell a cash secured put, I'll go here where the ROR is. You will have different places where you can find this on different platforms. This is for Tasty Trade, and you can come here and you can change the thing here. And right now it's at ROR. Like I put it on ROR. I changed it to Delta as well, but I go by return on risk. So return on risk on my money. So I always try to get 1%. at least. Sometimes, depending on what the market's doing, I'll go up and maybe get one, around 1.91 or two. So for and it always also is it's market dependent, right? So with this huge drop, right? This huge drop where TNA is trading at 37 and we're on the bottom standard deviation channel, I would not mind going up and being closer to the money. Like right now, what is it like? Yeah, 37. So I wouldn't mind selling a 36 cash executed put because we're so low on the chart right now. Like if you look at we're right at this bottom prices, discount prices. I also like to look at the weekly chart, see where we're at as far as the weekly chart. So for every different for different charts, you're gonna have the indicators show you different things. So that's why I always look at the weekly and the daily because I trade monthly, usually 30-day, not more than 30-day days to expiration options. So we're kind of like at the bottom. It could also always go down, but I feel comfortable selling cash secure puts down here, like right at this line where most of the volume was traded in the weekly chart or below it. So like I said, it's always market dependent, but in general, like but in general, I will not trade in anything that gives me less than 1% per 10 days. Obviously, if I'm going to trade like a 30-day expiration or 31, whatever, I'm going to look for a 3% trade. Okay, so right here, the closest 2.33. I rather trade this 4%. All right, so for 31 days, you're getting a 3%, a 4% ROR for your money. That's how I would trade that. Okay, and obviously we're looking at open interest to make sure that there are enough people trading it so you can get in and out. So that's what I look at as far as placing the trade on the option chain. I also look at delta. Usually I'll always, for the most part, I will do a 30 delta. Okay, now let's move on to market sentiment, and this is kind of how I look at news and all that has to do with overall market happenings, right? So first, the VIX is right here. If the VIX is too low, that's when we get the least amount of money for puts. So usually it's not that important for me when it comes to trading these leverage ETFs because I just kind of look at the chart, and if it looks like a favorable time to sell puts, I will do it regardless of what the VIX is. But obviously, if the VIX is elevated, we're going to get more premium for puts, and I would definitely be more aggressive with placement, like right now, of my trades. Forest Factory. So Forest Factory is a place where I get to go look at important market events that are coming up. So let me show you right here. I don't trade Forex. I don't trade Forex, but I do like their calendar because it's pretty intuitive. So for today, Tuesday, February 25th, what's going on? Right now, look. So right now, President Trump is talking. So if you are aware, if you were in the market when on the first Trump presidency, you know that you would have to keep tabs on what he was saying because anytime he would say something, not every time, but a lot of times when he said something on Twitter, the market would move. So now we're at the same spot where it is important when President Trump speaks. It's so important that they even added it on the calendar. This wasn't here yet. Like an hour ago, I don't think this was here. And this just popped up today. There was nothing going on February 25th as far as important events in the market. But they just added this not too long ago. So obviously it moves the market, so they put it here. And the thing I like about this is it gives you kind of like, it tells you how critical it is or how important it is. Obviously, the red folder means it's a very important event. So, or I don't anything else other than U.S. I'm not too worried about. I just worry mainly about the U.S. Something that's related to the U.S. market. And whenever something important is going to happen, there's going to be a red folder in it. And whenever, for example, FOMC or Jay Powell speaks, you will see it here. Jay Powell speaks and it'll be in red. So during those days, I will kind of refrain from putting new trades on because I don't want to get caught in some crazy volatility. I'll just usually wait until they finish talking or the meeting's over and see how the market reacts. And then I will go ahead and place some trade if I see something good, some good trades available, right? So you can look at this and it'll tell you what's going to happen. It's just a calendar. There's other calendars, but like I said, I like the way they present it here at Forex Factory. So you can look up, different days. So that's one thing I look at. And then just the general market outlook, I just, looking at the broad news. And that's one of the advantages of trading these is that, like I said before, you don't have to be glued to the computer looking at financials and seeing what each niche or each stock is doing. You can always, for me, it's just broad market news that I care about, right? So other than that, I mean, that's how I look at that's how I place, how I look at things and place the trades and when not to, and when it's more favorable. Last thing I wanted to mention, a lot of people are scared of trading these leverage ETFs because they're scared that they might go to zero or whatnot. And I just wanted to show you something here, right? So another reason why I'm okay trading these is because they've been out for a long time. So TNA, TQQQ, all the ones I just mentioned, these ETFs have been out for a long time, and they've gone out. They have gone through a lot of market volatility and market downturns. So we're gonna go to the max, and as you can see, the inception date of TNA was the year, it's 2008. So they're like almost 20 years old, right? And they've gone through ups and downs. And as you can see here, this is like the COVID. This was the COVID drop, and then he V-line back up, right? So these ETFs have been battle tested, and a lot of people lose money on these because they don't even look at the chart. They're just like, oh, triple leverage, three times the gains. They don't have any risk. They don't control their risk. So people are like, a lot of people will buy up here and then it tanks hard, and then they're like, oh, these ETFs are super dangerous. Don't do it. For anything that you do, you have to know what you're doing, right? So I would not be trading anything. I would not be trading any puts up here, obviously. So, and again, you have to learn to read a chart. You have to know when it's a good time to get in. And like I said, I sleep well at night because I'm indexed. I'm not in some individual stock, and I know that at some point this will bounce up. Maybe not all the way up, but since I position myself at a lower area of the chart, I'm not up here I don't have shares up here where I have to wait till this thing goes all the way up back to 54, which it might not do for a long time. I'm down here, and at some point, we're gonna have a nice little bounce where I can either take assignment or roll down and out and just play around, move around together with the price, and continue to manage my trades. And like I said, since it's cheap enough, I can sell multiple puts and roll them at different expirations and whatnot. And that's what's been working out for me so far. So if you have any questions, let me know in the comments. Hopefully this was helpful for anybody that's been contemplating trading these, and I hope you got something out of it. Like I said, if you have any questions, leave it down in the comments. I will continue to give you updates on my account. Probably not on videos all the time unless something is worth putting on video. I will be doing it on the community notes. All right, guys. So hope you all have a blessed day. And just hang in there. If you're in any of these, if you're down on any of these, just don't be panic selling. You're trading indexes right now. A lot of people Lastly, this couple months people been talking about, MSTR and all these stocks, and now, look at MSTR. It's like down in 246, and I don't know. I'm not gonna go over it, but a lot of people were just celebrating when they were up here. They bought up here, and now they're here, and just that's why I'm indexed, guys. Anyways, I hope you all have a good day and enjoy the rest of your week.